And now for a look at the day's top business news. France 24's business journalist Brian Quinn joins us from home. Brian, starting with stock markets in Asia, seeing a very good start to the week, following, among other things, the signing of the world's largest free trade agreement. Fill us in on those details.
Eve, that's right. Asian index is definitely getting a nice pop Monday, particularly in Japan and Korea. Tokyo's Nikkei is up over 2%. The Kospi in Seoul not too far behind. That comes after the signing of the Regional Comprehensive Economic Partnership on Sunday. That RCEP brings together 15 countries across the Asia-Pacific region, including South Korea, China, Japan, Australia. Member nations make up around a third of the world's population and account for about 30% of the global economy. The deal is set to eliminate around 90% of tariffs between its members. Analysts say that could boost the world economy by around $200 billion within a decade. The pact is being seen for a pretty significant win for Beijing, helping to cement China's economic influence in the region, while not really requiring very much in the way of environmental or human rights considerations. A notable non-member here, India, dropped out of negotiations in 2019 amid growing tensions with neighboring China. It's also a big miss for the U.S., which pulled out of the more ambitious Trans-Pacific Partnership as one of Donald Trump's first moves as president. RCEP is historic in that it is the first ever trade deal between China, Japan, and South Korea. We are seeing that reflected in the markets today. Japanese exporters marking some big gains, especially in the auto sector. Korean tech firms like Samsung getting a nice bump as well. And some of those gains are probably also due to some favorable economic data showing the Japanese economy grew by around 5% in the most recent quarter. Asian economies overall are currently seeing some of the best results amid this global pandemic, particularly among tech manufacturers in the region, since they are the ones who are making the laptops and screens that are enabling so many people to work from home.
Indeed. And Brian, another of our big stories today, the launch of SpaceX's Crew Dragon capsule to that International Space Station. Not just a story about rocket science, Brian, tell us about the financial incentives.
Well, Eve, Sunday's launch is the latest step in the privatization of U.S. space travel. Up until 2011, NASA itself owned and operated pretty much the entire U.S. space program. That ended with the closure of the Space Shuttle program. Since then, the agency has been turning to private industry. NASA has so far committed around $8 billion to what's called the Commercial Crew Program. The idea is to let competition among private firms make smaller missions like going to the International Space Station as efficient and as cheap as possible so that NASA can then focus on going back to the moon and then on to Mars. Now, the two main companies vying for bids here are SpaceX and Boeing. Boeing's contracts with NASA are worth around $4.8 billion, while SpaceX's are worth around $3.1 billion. SpaceX is about a year ahead of Boeing, though, in this space race after a failure of one of Boeing's test flights this past summer. NASA, in any case, has estimated that using private firms has saved it around $20 to $30 billion in development costs. For instance, the agency has given SpaceX around $1.7 billion to develop this Crew Dragon capsule. Development costs for the space shuttle, meanwhile, were about $27.5 billion in today's dollars, so big savings there. Current operational costs now also far lower. The space shuttle was about $1.7 billion for each launch, while Crew Dragon launches cost around $400 million each. And in fact, since the end of the shuttle program, NASA has been outsourcing to a different government. In fact, it's been paying Russia to take astronauts to the International Space Station. That not cheap either. The cost per seat there went from $40 million in 2011 to over $90 million for the most recent missions. And that's been actually a critical revenue stream for Russia's space agency, Roscosmos. That revenue stream could be about to dry up as the price per seat aboard Crew Dragon now comes in right around $55 million, so a lot cheaper there. And what we're seeing is the beginnings, in fact, of a price war between SpaceX and the Russians. The Russians say Elon Musk is only able to offer this low price due to top-up funding by U.S. government agencies. But those Russians, they're now dropping their seat price by 30% in an attempt to compete. NASA says it's not a competition. Astronauts from the U.S. will still fly on Russian Soyuz rockets, and cosmonauts are welcome on these U.S. commercial flights. The reality, though, is that like many areas of U.S.-Russia relations, spaceflight has been a source of a bit of tension lately, and it's not likely to get any easier in the near future with these new developments.
Okay, Brian, thanks a lot for that. Brian Quinn there, bringing us just a taste of some of those astronomical sums put into space travel.